Hey everyone, midcap mutual funds have delivered stellar return over the past few years. Many investors love them for their perfect balance. Not as volatile as small cap, yet more growth potential than large cap. But here is the catch. In the current market environment, midcap stocks are not exactly cheap. In fact, many experts believe valuations have run up too far. So before you jump in, it's critical to know where these midcap mutual funds are actually investing your money. Which companies are they backing? And have fund managers changed their strategies in last 30-40 days given the sharp market moves? So in this video, we'll break down the top 5 mid-cap mutual funds in India based on their asset under management, and then we'll reveal their top stock holding along with latest addition and what this tells us about their outlook. But before we begin, please note that the idea behind this video is to identify high potential mid-cap companies where India's top institutional investors are bullish. But you need to deep dive further to build conviction before investing your money. Alright, let's get started. So the largest mutual fund in mid-cap category is HDFC Mid-Cap Opportunity Fund that has an AUM of nearly 75,000 crore rupees. This fund has generated 21.3% per annum CAGR return since inception. Next, if you look at the allocation, in large cap it has got 5.6% exposure, mid cap is 66.7% exposure, small cap is 20.15% exposure. Next, if you look at the top holding of this fund house, first top holding is Max Financial Service with 4.45% allocation. Now, Max Financial Service is the parent company of Max Life Insurance. Now, if you look at the P ratio, you'll find it always expensive because in life insurance company, you cannot gauge the valuation in terms of PE ratio. But again, we have to discuss it separately, why you should not use P ratio, why embedded value is more important, but that's a separate topic altogether. But for now, Max Financial is the top holding of HDFC Midcap. Second is Federal Bank with 3.36% exposure. Again, we have discussed Federal Bank multiple times in the past. So, and the best part is the valuations are also reasonable for Federal Bank at a price to book of 1.4 and PE of 11.9. Next is your Balkrishna Industry. This is one of the least talked about company, but one of the finest company in off-highway tire segment where HDFC Midcap has got 3.34% exposure. And if you look at the valuation also, it is reasonable at PE of 29. It's been 3 years, there has not been much return, but if you look at institutional investors, they have been consistently increasing stake in the company and net public holding is slightly reduced. And overall, if you look at it, more than 94%, nearly 94% stake of the company is with promoter, FIs and DIs, and only 6.46% is with public. The next company in the list is Indian Hotel, the parent company of Taj Group, where it has got 3.3% exposure. Now the question is Indian Hotel valuation decent enough? So at the moment, it is trading at a P of 64, which is not cheap actually, but then company has been growing at a very good rate. If you look at it, last 3 years, 98% CAGR, 10 years, profits have compounded at 28% CAGR rate. So obviously the leader in the segment will always command a premium, but the only question is it worth paying a P of 60-65 to Indian Hotel? Right. Next, if you look at the top stocks that HDFC Midcap has purchased in last month. So this is as of April 2025, where the first purchase is AU Small Finance, where they had 1404 crore of exposure. They've increased it by 529 crore. So 529 crore of purchase. Current value is 1933 crore. AU Small Finance is very interesting company. If you look at the valuation also, trading at a price to book of 3. In last 3 years, AU Small Finance has not generated any return. And if you look at the valuation also, it has fallen significantly from the highs of price to book of 7 to now at 3. And that's where I also find a lot of value in AU Small Finance. Then you have got Max Financial Service, as we've discussed earlier. So they've increased stake by 400 crore. And then third stock is Hexaware Technology. This is a recently listed company. So I remember this company was listed until September 20 and then they got delisted and again it has been listed. Currently trading at a P of 41, 42. Valuation wise, we have to see how's the growth. So since it is recently listed, we don't have a lot of data. But then if you look at 3 years of growth, it is 16% CAGR. And apart from that, profitability is very good. Debt to equity is reasonable. Cash generation is also very good. Next, if you look at, you've got 2 automobile stocks that HDFC Midcap has purchased. First is Apollo Tyre and second is Bosch. Right, so this is the buying pattern of HDFC midcap. Then second mutual fund in midcap category in terms of AUM is your Kotak Emerging Equity Fund with an AUM of nearly 50,000 crore. This fund has generated a CAGR return of 21% since inception. Next, if you look at the asset allocation, it has got 11% exposure in large cap, 69% in mid cap, and small cap has got around 14-15% exposure. Now, what are the top holding of Kotak Emerging Equity? First is Coromandel International, where it has got 3.46% exposure, part of Murugappa Group, one of the biggest wealth creator in last 10-20 years. So if you look at Coromandel International, it has generated fantastic return in last 10 years. Look at this, from levels of 238 in May 15, it is at nearly 2,450. So nearly 10 times return in last 10 years. And look at the history from 20 rupees to now at 2,500 since year 2005. So in 20 years, this stock has generated nearly 100 times return, right? So again, valuation wise, if you look at it, P is at around 40, which is not cheap, but then again a leader in the space and part of very prestigious Murugappa Group. Second company with highest allocation is Fortis Healthcare, where it has got 3.4% stake. Again, one of the leading healthcare service provider in India, trading at a PE of around 60-70. Again, valuations are not cheap, but one of the leading player in healthcare space. Then it has got exposure in Ipca Lab, right? So again, from pharma space. So company has got exposure in your agriculture segment, then your hospital, and then the fourth largest holding is Mphasis with 3% allocation. Now this is quite interesting because if you look at the IT sector, there's been a lot of negativity. There's a slowdown in the industry. Then there are a lot of issues in the US because of the slowdown and Trump tariff. But your Kotak Emerging Equity has got conviction and has got fourth largest allocation in IT sector, which is Mphasis. And if you look at the performance also, it has been relatively decent. Company has grown its PAT by 10%, and although revenue is not that great, but considering the weakness in the IT sector and the slowdown, the performance is not bad, and the valuations are also decent at a PE of 28-29. Then if you look at the recent purchase, first purchase is Dixon Technology. Again, Dixon has been a fantastic wealth creator, growing at a very fast rate. The only question at the moment is it worth paying a PE of more than 100 to Dixon? But otherwise, fantastic company. We have been tracking Dixon and discussed it multiple times from very low levels. Kotak Equity has got conviction in the company and it has actually increased stake. Second stock where it has increased stake is Solar Industry. Again, one of the leading player in your defense segment. The only question is it worth paying a PE of 100, right? So the question at the moment is, businesses are fantastic, but they are trading at expensive valuation. Next, you have got Coromandel International. Then next two purchases is quite interesting. One is Swiggy and the second is Eternal. So your Kotak Emerging Equity is betting on the QSR segment by buying both Swiggy and Eternal, and this is the latest purchase of last month. Moving on, the third mutual fund in mid-cap segment with highest AUM is Nippon India Growth, that has an AUM of around 35,000 crore. This fund has generated 19% CAGR return since inception. Next, if you look at the asset allocation, large cap has got nearly 19-20% exposure, mid cap is 65-66%, and small cap is 12-13% exposure. What are the top holdings? First is your BSC with 3.47% exposure. BSC has been one of the biggest wealth creator in last 2-3 years. Fantastic journey. But then the question is, PE of 75-76, is it worth paying? Right? So obviously, if company is growing at a fast rate, it will command a premium. Look at the kind of growth it has witnessed. But the only question is this a sustainable growth? So that is something we have to wait and watch. At the moment, valuations are on higher side, but then this is the only company in the exchange space. So I assume it will command a premium. The only question is it worth paying this kind of premium or not? Next, we have got Cholamandalam Financial Holding, again one of the finest company, part of Murugappa Group, where it has got 2.87% exposure. Cholamandalam, again the issue is trading at a price to book of 5.84, right? So valuation wise, trading at a higher valuation, but then the thing is, it is again one of the finest company. Then it has got Fortis Healthcare with third highest allocation with 2.62% exposure, and fourth is Persistent System with 2.5%. Again, IT sector, which is the fourth highest allocation. Persistent is also a fantastic company, growing at a fantastic rate. Look at the CAGR growth, consistent performance, but trading at a PE of more than 60. Next, moving on, the latest purchase. First is BSC, where it has increased stake from 1038 crore to 1204 crore. So basically buying of 166 crore. Next is AU Small Finance. Again, this is also purchased. We earlier discussed SDFC also purchased. Dixon Technology. Again, Nippon is also purchased. As we discussed, Kotak also purchased Dixon Technology last month. Then we have got Indus Tower. So quite interesting, one company from communication space. And then again, Max Financials, which is where it has increased slight amount of exposure. Moving on to the fourth mutual fund with highest holding, it is your Access Midcap Fund with AUM of around 29,000 crore. This fund has generated 19.6% CAGR return since inception. If you look at the exposure, large cap is 13%, mid cap is 72%, small cap is around 5%. Top holding of Access Midcap include Fortis Healthcare with 3% exposure. Then Indian Hotel, again part of your Tata Group and the leading player in Indian hospitality segment with 3% exposure. Coromandel International, part of Murugappa Group with around 3% exposure. And then again Persistent System with 2.9% allocation. Then if you look at which stocks this group has purchased in last month. So first is BSC, where they've increased their exposure by 139 crore. Next is Cholamandalam Financial Holding. So again, this is a repeat. Then you have got Dixon Technology. This is quite interesting. So overall, it looks like all these mutual fund houses are betting on the leader in the space, which are growing at a fast rate, and they're fine paying a premium valuation, right? And then they've got Prestige State from real estate sector, and then again solar industry. Right, so these are the top purchase of Nippon India Midcap Fund. And final, fifth fund in midcap space with highest AUM is Motilal Oswal, that command an AUM of around 28,000 crore. This fund has generated 24% CAGR return since inception. If you look at the breakup, by the way, interestingly, this fund has got exposure of 67.9% in equity, so sitting on good amount of cash as of now. Right, and if you look at the exposure, large cap has got 8% exposure, mid cap has got 59%, and then small cap 0% exposure. What are the top holding? Persistent System. So the IT company from mid cap space is the top holding with 10% exposure. So lot of conviction of Motilal Oswal mid cap fund and Persistent. Then again, second is also IT sector company Coforge with 9.47. So 20% exposure in just two companies. Third is Kalyan Jewellers with again a very high 8% exposure. So top three companies command nearly 28-29% exposure in your Motilal Oswal Midcap Fund, and fourth company is Polycab India with around 5% exposure. Then if you look at the top stocks it has purchased last month, first is your Kalyan Jewellers, second is your Persistent System, third is Polycab, fourth is Bharti Hexacom, and fifth is KEI. So it has purchased two capital good company in last month, and by the way, both Polycab and KA have given very good result in Q4. The only question is Polycab command a PE of around 40-45, yes, so 45 PE, and KA industry command a PE of around 47. So valuations are not cheap, but then we are living in a time where PE of 40-50 is the new normal. So that's how it is. Both are growth companies, one of the leader in the segment, but trading at a PE of 45-50 in that range. So you need to decide whether it is worth buying or not. For me, the valuations are on higher side. Now what I've done is I've tried to identify the common stocks in top holding as well as common stock in latest buying. First common stock in top holding is Persistent System. So out of 5 top mid-cap companies, 3 of them hold Persistent in their top 4 holding. First is Nippon, second is Axis, and third is Motilal Midcap. Second is Indian Hotel, that is part of SDFC Midcap and Axis Midcap. Third is Fortis Healthcare, that is part of Kotak and Axis Midcap. And fourth is Cholamandalam International, that is part of Kotak and Axis. So this gives you a good idea what are the top companies, top high conviction bet of these mid-cap funds. Clearly it has got IT company, then Indian Hotel, part of your hospitality, travel and tourism sector, Fortis Healthcare, part of Healthcare Group, and Cholamandalam International, which is part of Murugappa Group and a leading player in your agriculture space. Now what are the latest common stocks that they have purchased? First is Dixon Technology. 3 fund houses have purchased, Kotak, Nippon and Axis. Clearly these fund houses are betting on growth and they are willing to pay a premium valuation even though if it is more than 100 PE valuation. Next is AU Small Finance. SDFC and Nippon have made a purchase in AU. By the way, valuations are decent for AU Small Finance. Solar industry, Kotak and Axis have purchased, but then the valuation are trading at a P of more than 100. Then you have got BSC, which is purchased by Nippon and Axis Midcap. And fifth stock is Max Financial, that is purchased by SDFC and Nippon Midcap. Now, obviously, we need to deep dive further to really identify where are the buying opportunity. But the idea behind this exercise is to identify what are the top conviction bet and what are the latest purchase by these top mid-cap mutual funds in India. Now, if you find this video useful, do share it within your friends and also let me know if you want me to do a similar exercise for small cap mutual fund, and within this particular exercise, if you want me to deep dive into particular company, let me know in the comments. I'll see you next video. Till then, take care.